Thank you, Peter. So, recent times have seen something of a revival in major offshore discoveries from Guyana, the Eastern Mediterranean, South Africa, and hopefully the Gulf of Mexico in Mexico, which seems to be very promising, together with a gradual revival of offshore development drilling. And it's primarily the large majors and NOCs who've dominated this uptick. I think it's important to remember that currently, if you look at deep water production, it's the Americas that dominate totally what has happened in the world. It's on top of Brazil's remarkable success, it's the opening of Guyana by ExxonMobil. And something like, if you combine all that with the Gulf of Mexico, 90% of the deep water production is located in the Americas. And actually, discoveries in other areas are more challenged when it comes to development economics because they don't have the same concentration. Doing more with less remains the mandate that's being given to offshore. Smaller initial developments ensure earlier returns. What's changed that makes offshore development exploration work in the current environment is a very important question, particularly in terms of technology. And finally, how do these opportunities compare to others, particularly short-cycle tight oil and long-life conventional plays? Though today we're going to try and restrict that discussion to how the economics of deep water have changed. How has project management improved since the last cycle? Technology, lower operating costs? And has there been any change in the access to resource and investment term improvements, which make exploration plays more viable and break-even development costs more reasonable? So, from my past life of Schlumberger, and in order to avoid being accused of any favoritism, which is something that used to occasionally happen, I'm going to introduce the panelists in alphabetical order. And we're fortunate to have representatives of the three largest IOCs. So Mike Cousins is the Senior Vice President of Exploration and New Ventures at the ExxonMobil Upstream Business Development Company. James, or Jay Johnson, is the Executive Vice President of Upstream at Chevron. And Wael Sawan is the Upstream Director at Shale. And to be absolutely sure there's no favoritism, I'm going to inverse that order when I start asking the questions. So, Wael, could you describe to us how you see the role of deep water offshore in the future oil production mix of Shell, and how you make those judgments, and how you look at the period of returns, short-term returns, as opposed to long-cycle returns that we were used to in the past?
Thank you, Andrew. I think firstly to recognize deep water makes up around 10% of the overall oil production at the moment, and we decline at around anywhere between 10 to 20%. And so within 5 years' time, we're going to have to constantly be replenishing around half of our deep water production, which means there'll be a lot of focus, a lot of investment in this space. What we've seen over the last few years, in particular in deep water, is well costs have come down significantly. Put aside rig rates for a second, but well costs in terms of the execution that has come through, we're seeing roughly 50 to 60% reduction in the well costs. That plays through very heavily in a deep water space because, of course, statistically from an exploration perspective, it gives you a few more shots at goal. And from a development perspective, the bulk of the spend in a deep water development, around 60%, goes into wells. And so deep water's longevity, I think, is very much dependent on our ability to be able to drill low-cost, safe wells on a day-to-day basis. You add to that, I think, the challenge that shales has brought to the equation, this short-cycle challenge. I think it's been the best thing that's happened to deep water because it's forced us to rethink the way we do deep water developments. It was typical to get a development in 10 to 12 years from discovery to first oil. Today we look at 6 to 7 years. With Jay here, for example, in our Wael development in the Gulf of Mexico, we're trying to get to that 6-year period by using standardization, by using replication where we can, by being smarter around our appraisal campaigns. So I think deep water has a big, big role to play. I can tend to be a bit biased because I came out of the deep water business, so please excuse me for that. But I think the economics speak for themselves. We're talking about sub-$40 break-even price projects on a consistent basis. In fact, almost every single project in our deepwater portfolio right now is sub $40 break even. And the challenge is going to be not just to be able to discover the next big host, but actually, importantly, to continue to find these low-cost tiebacks that tend to make deepwater projects economic for a long, long period. And finding that balance in the portfolio of keeping the big hubs and constantly developing urban areas around it, I think will make deepwater more and more attractive in the years to come.
Jay, do you think that these cost reductions that you've seen, I mean, leaving aside the rig rates, which I think is a fixed thing that we've seen over the last few years, are going to be sustainable? And do you think that service companies are going to be able to survive on the level of activity and the cost restraints that you impose on them, or you impose on them? I'm being somewhat facetious. They're obliged to accept.
I'll take it as a compliment,
Yeah,
actually.
okay.
No, I think they are sustainable, and it's for a couple of reasons. When Wael talks about the faster drilling times, for example, the execution times, it's not coming at the expense of the contractors, but rather it's coming at the expense of the non-productive time, the flat spots in your drilling program, as well as being smarter about the combination of bits, mud weights, everything else that go into drilling the wells. And so the use of data has allowed us to optimize drilling performance, and that really doesn't come at anyone's expense. It just means you can drill more wells for the same amount of money. When we look at the technologies that are going into developments, I think it can actually help in some ways enhance the contractor's experience, because when we explore in the past, let's just take the Gulf of Mexico, it had to be of a certain size to be able to support a greenfield development. Some of the new technologies, for example, at Jack St. Malo, are very high horsepower subsea pumps that can move fluids a long distance. And so when you start reaching out 30, 40, 50 miles from an existing facility, it actually de-risks the exploration program, because much smaller accumulations can be completed with a subsea completion and brought back to an...
These are multi-phase pumps, I assume, right?
We're shifting now to those. We've proven the single phase, and now we've just certified multi-phase, so they'll be able to move it back. So it actually serves to de-risk the industry, and I think actually promote more investment, more exploration in areas where you've got existing infrastructure.
So this has allowed you to downsize the subsea infrastructure considerably, right?
Not just downsize, but it's the surface facilities. You don't have to build a new facility for every discovery. You can tie a lot of this back, use existing ullage, which really extends the returns both of the host as well as open up new opportunities for the tiebacks. And that, I think, is a game changer in addition to some of the advantages Wael was talking about.
So let me switch to another subject, Mike, but I'm going to ask everybody their view on this. And so, you know, you have had some spectacular success in almost rank exploration in Guyana. And what I'm really looking to understand is whether or not, you know, beyond the advances that were made in seismic in the 2000s, 1990s and 2000s, has the application of high-performance computing, machine learning, AI, the ability to process large-size data volumes in very different reiterative ways very fast, has that made a difference to the risk-reward ratio in the exploration that you do and the time from the acquisition of data to being ready to actually drill an exploration well?
Yeah, let me sort of answer it in this sort of particular way. When you think about success in exploration, whether technology really plays a part in success in exploration, quite often, if you ask people, what does success in exploration, in deepwater exploration or exploration mean, they'll say, well, it represents Guyana, or it represents what E&I did in Zohr, or what the gentleman talked about in the Gulf of Mexico. But I would argue that as you think about big data and analytics, everybody moves to 3D data. They say, okay, it's on 3D seismic, it's data rich, it's people intensive, it's pattern rich. But by the time you've got the 3D data, you've actually lost the race for the new exploration areas. By the time you've got the 3D, that race is over. You have to be able to, with data analytics, with pattern recognition, you have to go way, way, way upstream of 3D seismic, to go way upstream of that to be able to see things that others don't see in basin analytics, basin geology, and be able to apply the learnings of the tens of thousands of geoscientists and engineers that came before us to find those things that others have not. And then by the time you get it, if you have a constancy of purpose in understanding deep water depositional systems or carbonates in deep water, as we all have, then you can go rapidly, because the critical factor is quite often the subsurface, which will give you the idea whether or not you can go to FID. If you understand that very quickly, you can move quickly to production.
But to do all those tasks that come upstream of 3D seismic, to what extent has high-performance computing, machine learning actually changed them?
All of us have put out articles, and our other IOCs have put out articles trying to compare who has the biggest high-performance computing, as do the contractor firms. It plays a huge role in being able to analyze large volumes of 3D seismic, absolutely. But to use the old quote, oil is found in the minds of men and women, but applying that same high-performance computing way, way upstream of the 3D seismic is where it makes a difference.
Well,
I think very much support what Mike said. I mean, I think there's been a lot of talk about it. I think it starts with augmenting the capability that our people have. This concept that we can go fully digital or fully technology-based, I think is flawed. What's happening more and more is that this capability, whether it's high-performance computing or whether, for that matter, it's artificial intelligence, it's allowing us to do things differently than the way we used to do it in the past. In Shell, for example, we have a suite of tools, GeoCrawler, Salt Crawler. They're nothing more than an ability to be able to take significant amounts of data and to be able to do what we used to do in maybe 3 to 6 months in a few hours. Not that that solved the equation, but that allows our people then to focus on the key areas that are critical in identifying those geological features and then driving the analysis beyond that into a space where we can make important commercial decisions as well. I think if you look at some of the things we've been using, whether it's, for example, wide azimuth technology or ocean bottom sensors, just the evolution of technology in deep water exploration is not a new thing, of course. It's been there for years and years and years. And it's getting into another level of sophistication, admittedly. But I do think we're at risk of, I think Mike said it well, we're at risk of falling into the digitalization debate and the excitement around it without recognizing that ultimately it's all a tool to unlock value. And the way we deploy those technologies to unlock value, the way we deploy data essentially to unlock value, and how we couple that with the capabilities of our people is going to be the differentiator for our companies.
So let me go downstream a bit from that question and ask you, once you are through the initial phase of exploration and you start to build development plans, how helpful is digitalization, high-performance computing when you get to that stage where you have to reiterate many, many times, you have to try different solutions? Has that really, as it would appear, particularly with ENI's performance in Zohr, which frankly shocked me, the speed with which they're able to do it, has that really changed the speed with which you can develop development plans?
Let me jump in, because I think that if you take that example and you look at high-performance computing associated with deepwater depositional systems, the ability to iterate multiple models extremely quickly, which is Guyana, 4.5 years from discovery to production. That ability to iterate multiple models and come up with connectivity of the reservoirs that will ultimately drive your speed, not just building the FPSO, the subsurface, incredibly important. So,
I think we're seeing two additional things that I'd just add to it. One is in the exploration environment itself, it's the ability now not just to look at each area in isolation, but to actually start connecting these data sets into a global view that really helps us get insights that we would have never picked up on before. So that's an aspect that the high-performance computing is allowing us to do that we never had. And we recently announced venture with Schlumberger and Microsoft that starts to develop a new platform for the subsurface that'll facilitate this. The other thing is as we get into the development drilling, and we've now got local information, traditionally it's taken us about 9 months to go through the actual design of a deep water well. And the AI now that's available is allowing us to do that in about 3 months. And so where it took an engineer all that time just to come up with an acceptable design, we're now able to iterate it and actually come up with an optimal design. And that's really improving the reliability of drilling, improving the likelihood we're going to have a successful well, and I think really improving our risk profile on some of these deep water developments. And that's really important when you consider what the cost of each individual well is. To Wael's point, it's a significant component of the overall facility cost, and loss of one well makes a difference in a deep water development.
I think, Andrew, on the technology applied in the development, I think it's interesting because in the deep water space, at least my own mental model is, you want to try to commoditize the development as much as possible. And you want to use your full capability to be able to understand the subsurface. That is where the differentiation is for companies like ours. And so I gave the example of Vito or Wael. Of course, you can look at how can you deploy technology to be able to fast-track it. So, you know, more and more, for example, our facilities are using digital twins so that you can avoid having to start from scratch, use these digital twins, both in terms of how you develop your assets, but also importantly, how you develop your staff to start running the asset well before the asset is even built, and to be able to go into seamless transitions to do that. But I think fundamentally, it's changing not just the technology space, it's changing the entire business model of how you develop deep water offshore oil and gas to be able to compete with the shorter cycle shales. If we just say, well, this is the way deep water's always been done and we will keep doing what we've done, over time we will erode the competitiveness of our core business. And so being able to adapt to the times, leveraging technology, thinking about different business models, working with our contractor partners in a different way, I think that entire ecosystem is what's going to have to change to be able to get us to be even more competitive than what we are today.
So just to stick with the technology for a minute, to what extent has your capacity to improve this modeling, to improve the way you do the development plans, to be able, I would imagine once you've got one development well designed, you can reiterate it very quickly and all the rest of it. But also you're instrumenting the subsurface to an extent that you never did before. Is it possible to say yet that this is going to have an effect, significant or otherwise, on the recovery factor from deep water?
I think absolutely. You know, so I mean, that is the prize.
Yeah.
The prize is not cutting 10% out of the cost. I mean, that's nice, that's interesting.
Yeah.
But you get a single % more recovery out. You know, you fundamentally change the economics of the project.
Does that make it easier? No, not easier. Easier is the wrong word. Does that allow you to take a development plan that gives you the short cycle return, but knowing that later on there's more to come?
That's the whole urban plan concept we touched on, because the beauty of deep water is your seed investment is the anchor on which you're building an entire play for decades. And so if you go into deep water with the mindset, I'm going to develop this field, and that's it, you're very short-sighted.
Exactly.
If you come at it from the perspective, actually, commercially, I have an entire urban area through my bid rounds, through negotiation, whatever the means is. You've created that asset. Now you've been able to develop that first anchor field. On the back of that, Jay mentioned earlier, how do you feed back to be able to fill up the ullage? How do you then use the ullage that you have to test the dynamic data coming out of another discovery, and so on and so forth? Things like, for example, in our shop, the Mars Corridor in the Gulf of Mexico, Perdido, which we share as well. Those are assets that keep giving for decades, well beyond the initially envisaged concept.
Right. And I assume that Guyana is being planned very similarly, Mike.
Well, I think the way to think about it is we're falling into a little bit of a trap of saying deep water is deep water everywhere, present-day deep water. The most important part about deep water, the highest value part of the value chain is in the quality of the rocks.
Yeah.
quality of the reservoirs and the connectivity of the reservoirs. You can guess I'm a geoscientist. The quality of the reservoirs. So it can be deep water carbonates. It can be deep water lacustrine carbonates, as in Brazil. It can be deep water sands. Understanding how the technology applies to understanding the subsurface as well as the subsurface is actually the key to the maximum value that allows you to go quickly. That's where the value is.
And if you look at new exploration plays, and I'm not asking any of you to disclose what you're looking at, how much of this is, there's always something that's analogous, right? There's always something that's going to be analogous, but this capacity or this ability to process vast amounts of data or to look at basin geology in a different way, how helpful is this going to be going forward when you start looking at West Africa again, or you start looking at other parts of the world? Why don't you take that?
I think it's critical. That's why I mentioned earlier that the ability to link all this data into a common model and start to look for the analogs across unexpected places, I think is going to yield real tremendous opportunities as we look forward. When you think about exploration, at least when I think about it, most of the exploration today is in the deep water. The stuff we talk about on shore, the Permian and all that, it's just delineation. It's really not exploration per se. So I think this ability to look for the analogs and really use those to understand where the next opportunities lie is going to be critical.
Any comment, Mike?
No.
You guys agree too much.
No. Absolutely. The success in Guyana is built off 20, 30 years of understanding deep water, from Hoover to Angola to where Jay is heavily involved, to Nigeria, where Wael and Jay are heavily involved, to Romania, to then apply that to Guyana, be able to get into Brazil in a big way, to be able to access Mozambique with the confidence that we can execute. So it's not just, and this is what both the guys were saying, it's not just about making the analog of the exploration. You have to have the absolute confidence that you can execute well and execute with pace. And that execution with pace is what will provide the value. So that's where the analogs come in.
I think just one add from me, Andrew. I think indeed what's been talked about is how do you leverage the data to be able to go into relatively virgin territories for exploration. I think the other element is in particular territories where we have been for sometimes decades. The data set that we have developed and the information we have from the producing wells, of course, in addition to the appraisals we had in the old days, that is data that needs to be mined quickly. And I think that's where the industry has done very, very well.
Right.
It's how do we now evolve that into a place that goes into the very, very green field. That's the challenge. And I think we're getting there, but we're not yet at the point where we can fundamentally shift the pause of an exploration well by 10% yet, but I think we'll get there.
So let me go back to ask you another question about cost. So, if you look at the Gulf of Mexico and you look at Brazil, they have both, one has had it for a long time, the other one has created it over the last decade, a service contractor infrastructure that can support a huge amount of deep water activity. I mean, I can remember visiting a test for Chevron in the Gulf of Mexico. There were 14 engineering firsts on the test string. So, your chances of failure are really high. But the fact that in the Gulf of Mexico, you have immediate access to the support of, your own engineering people, the service company engineering people, means that it affects, finally, the contracting cost of doing things. It's true, it's become true in Brazil, and in fact, while a lot of people didn't understand why Brazil was creating a contractor industry, it was very obvious that they knew they were going to be in deep water for a long, long time, and therefore they had to have a domestic capability to be able to do it. What happens when you move to somewhere like Mozambique? Does that make a major difference to the cost of deep water, or even on the coast of Africa, where it's not one country, it's basically 7? Does that make a major difference, the availability of contracting and service capability?
I won't comment on Mozambique, given our lack of presence in Mozambique, but
First two.
but what I would say is, if you look across the patch right now, our contractor partners, by and large, globally covering, all the markets we're in. We haven't been in markets, we've explored recently in some markets where very, very thin local industry. Having said that, the majority of the partners we used are the same global partners who we have arrangements with.
Right.
Yeah.
Where we find it gets a bit trickier is in things like logistics, where you start to think about terminals, you think about the safety of the helicopter fleet, vehicles, maritime services, and the like. There are certain parts of that contracting capability that you have to go, 9 times out of 10, you end up going much more local. And that's where, at least we tend to have some of the challenges. Some of the global capabilities, if you're working with the Schlumbergers, the Halliburton, the Technip, FMCs, and those are partners we work with in deepwater, irrespective of what country we're in.
Yeah.
Right. The technology's really helped us in another way, and that's, we've set up a drilling support center in Houston that actually monitors all of our deepwater rigs around the world. So regardless of where that rig is operating, we've got full data streams back in, and you can have the same experts that are monitoring wells in Brazil, with deepwater Gulf of Mexico, offshore Western Australia, and using the AI now to monitor these data streams to just understand what's coming at us has been a game changer. So you don't have to locate all these different services and support around the world. You can really concentrate.
I was thinking more of the actual physical aspects of it, Mike, tell us about Mozambique.
Can I talk about Guyana a little bit more? I mean, same as what the two gentlemen just sort of said. For the big contractors, and I'll give a plug for the big contractors as well, how rapidly in Guyana and how rapidly they're gearing up in Mozambique, but how rapidly in Guyana, obviously timing was a big part, that they've been able to establish themselves and then leverage their global organization. If you look what Technip has done, as well as Noble, Technip utilizing all their experience and their structure in Brazil to train local Guyanese engineers is absolutely amazing. And so we a plug for the contractor community, we depend so heavily on them, and our tier one contractors are doing just as much and just as efficiently for all the local content, and again, they will step up and they'll do that in Mozambique.
So the other question they added to the list, I think you've all answered, was how important is deepwater exploration to your company's strategy? But one of you said that the only real exploration that's taking place is currently in deepwater. But do you see any limitations on your access to new acreage or, new countries in this? And I won't ask you to comment on the countries that have banned offshore licensing, because as we discussed before we came in here, the only one that matters on the list, and even that was sort of dismissed somewhat, was Canada, right? So, but that we went through a period of resource nationalism in the 2000s, which meant that terms got tougher and tougher for you to access new countries and new acreage. Are you seeing, is that easing up? Is it becoming easier to get access where you want?
I'm glad Andrew didn't mention all the countries, because we were at risk of offending someone. It just says how important it is for us to understand fundamentally the needs and wants of those countries and get in early with the value equation of what we can provide. So access has always been a challenge for us. Nothing has changed with how complex access is. But if you do it well, and if you present the value equation early enough to the countries, treat them with the right respect, then that access will be there.
And is it easier for gas?
I mean, the exploration game. We don't know whether 9 times out of 10 whether it's going to be gas or oil. So when you're as far upstream as we are, your value equation has to be for hydrocarbons and for energy security. Yeah,
I think for us, very much the same. 60+ 90+% of our spend is on deepwater exploration.
Yeah.
The question tends to be more, in my mind, the balance of do you go for near field versus frontier? That's always the sort of dilemma. That's a bit of the flexibility I think you have in deepwater. When you have low oil prices, you can shift a lot heavier into the near field exploration, and when you have higher oil prices, you can afford to take a few more bets on the frontier. The reason you take those bets is if you hit big, right? I mean, Guyana was mentioned by Mike. I think.
I'm glad you still call them bets, Wael, with all this technology.
Well, you know, I think the realistic answer here is 10 to 20% is what you're sort of looking at when you go into these things. So better than spinning a roulette wheel, but you know, it's not a slam dunk. And when you do win, I mean, Lula, which is the Brazilian field, but still the stat that still strikes me as the special one for deepwater is it took Petrobras 39 wells to get to 1 million barrels a day.
Yeah.
It's taken the industry 9,000 wells to get to that same level in the Eagle Ford and in the Bakken. Right, so just to give you a sort of sense of the scale, this is why deepwater is worth going after in a big way.
Now, you want us to be nice to each other, or you didn't want us to be nice with each other. I think we do ourselves a disservice when we talk about rolling the dice or bets.
So do I.
We do ourselves a complete disservice if we talk about exploration as rolling the dice. That's not what it is. It is about the best technical decisions and taking the right, well-managed risks on those opportunities. So I have a lot of discussions with some of my management where it's not rolling the dice. It's not bets. It is the science.
That's what my exploration guy tells me as well.
He told me. He told me. He said if you get a chance in front of Wael, give him
Say it.
Right?
I'd still rather be born lucky than smart.
Yeah. Okay, with
One
that,
other thing on the
maybe we could open it up to any questions from the audience, if there's some microphones. Yeah, go ahead.
There's there.
Thank you. Ron Booster from Reuters. I'd like to ask you about carbon intensity of projects. Sorry, and how you find the shale versus deepwater in comparison in that respect. And how much of a consideration is it when you start the process of exploration even, given the big focus on Scope 1 and 2 emissions today? Thanks.
Yeah, I'll touch on that. I mean, I think if you look at the carbon footprint, it's heavier on the shale side than the deepwater side, right? So deepwater tends to be very concentrated facilities, of course, and relatively simple in terms of what's on the top side. So to give you a sense, when we look at top quartile metrics in our industry, it's roughly 0.15 to 0.17 ton of CO2 per ton of hydrocarbon is what you would be using. Deepwater runs at around 0.05 to 0.07. Shales will be between 0.15 and 0.2 for multiple reasons. And we can touch on that. But by and large, imagine the footprint of deepwater is a lot lower. How does that play into the decision making? Again, it's a portfolio decision, and then on a field by field basis, we have to make some calls. So there are some deepwater fields that are well above 0.1, and you're going to have to sort of decide how you are able to then find abatement measures to be able to invest in to make sure that they fit the CO2 footprint that we are looking for. And similarly for shales, there's a lot of self-help. I mean, in the Permian, we reduced in 2018 our CO2 emissions by 75% in 1 year through choice and investment. So I think it's not your Delta card. You have to make choices in the way that you can bring down that CO2 footprint. We have a philosophy internally that every single year we need to keep improving our CO2 footprint. So the assets have to find ways to improve year on year.
Jay, you want to?
We've just recently announced targets for our greenhouse gas emissions, and they apply equally to the offshore deepwater as well as the shale. And I think it's how you go about the actual exploration and development programs. And do you think about the flow assurance from day one? And so when you develop, do you have a pathway for that gas so that there won't be any associated flaring is the first and most immediate opportunity. So by building it into our decision-making from day one, we are able to not only operate in an efficient manner, but bring those emissions down as we look at other opportunities to understand the source and the collective benefit that comes from those selective investments.
Mike, you okay?
Good.
Another question? Yeah, sure.
Hello, Ian Nathan from Energy Intelligence. I'm just thinking about, and this is for Jay and Wael, with regard to Gulf of Mexico. I'm curious, can either or both of you comment on, with regard to your partnership strategy with each other, what do each of your companies get out of the other in terms of the partnership? What are the best things that you get out of being in the Gulf of Mexico together? Can you go into a little bit of detail on that, please? Thank you.
Maybe I'll start this.
Please, yeah, go.
Look, at the risk of piling on, we respect the technical capabilities of both of these companies up here with us. And I think good partnerships are when each party brings something of value to the table. And none of these things, technology notwithstanding, are an absolute black and white. This is how it's going to be. And so the dialogue and some of the interaction that takes place with our technical people, with our commercial people, I believe we come out with a better solution each time, having had good, constructive debates, whether it's the subsurface, whether it's the best way to commercially develop, what size, what scale, how long should the plateau be. Those types of things, we come out with a better answer, having had intelligent people work together with different perspectives than any one of us would have come up with on our own. And that's what we really get out of the partnerships, more than even the risk diversification or the capital and things like that.
Yeah, I very much agree. I mean, at risk of making this a love fest across the three of us, I think what I would say is when we look at Chevron in particular in the context of the Gulf of Mexico, unlike shales, deep water, you get the chance to go after a handful of wells, and you need to be able to try to maximize the amount of information and decisions on which you're going to base that, or the decisions that you make on the back of that information. Chevron has wells which we don't have equity in, and vice versa. And so our ability to pool some of that knowledge when we go into a joint development is key. Unlike the shales, where a lot of that information is readily available and you can very quickly run on your own. So I think that's a differentiating feature. I think an element around the balance sheets of both partners, I think, is key, in particular in the Gulf of Mexico, where you want to be able to have a partner that's willing to put the capital that's required to be able to move in a big way in projects like this. And then I think there's a cultural element. Indeed, we were talking earlier that many folks see us as competitors, but we do have significant joint venture partnerships, not just in the States, but around the world. And you know, it forces a certain way of working together that both, I think, sides usually tend to value. So with both companies, we tend to have very, very strong partnerships that have lasted actually for decades, which to me is the test of time.
Just one thing to add. I think not all areas are equal. And as you know, we've got different partnerships with each other in different parts of the world, and we've got other partnerships. If you look at what we did in Cyprus and our partnership with QP in Cyprus was both of us understanding the value that we brought to that situation, government relations, being very like-minded with the approach. So I know that's not Gulf of Mexico to the question, but every partnership is different. The equity that we choose, the partnership we choose, and it's not all about just working with each other. It's working with very, very important partners for us all around the world.
Time for one more question. No?
Guyana? Anybody want to ask about Guyana?
I think you thrashed that to death.
No, I haven't. I haven't started.
Oh, okay. All right. Well, look, gentlemen, thank you very much for participating in this panel. And can we have a round of applause for the panelists?